Hey guys, what's going on? What do you call when three bears walk into a bar and they order vodka and Red Bull? You call that the bull market. Guys, that's the joke of the day. And look, if you're sitting there looking at your screen, asking yourself a question, why am I supposed to be buying calls when the markets are hitting all-time highs? You know you are a hardcore bear, and I do not want you to end up later tonight after the market close at a bar drinking vodka and Red Bull. Guys, hey, I'm a hardcore bear, but I've temporarily converted myself into a bull, which is why I'm having this nice little iced coffee right here. It's good. Now, in this video, we're going to answer a very important question. Why should you be buying calls when the markets are actually hitting all-time high? And as a bonus question, we actually got a very good question from one of our high roller members. Mr. Tam has proposed a very unique question today. Leonardo, I'm looking at the chart, and on one hand, it looks like we got this cup and handle that you've been talking in a lot of your videos, okay? But on another hand, I'm looking at the chart, and it looks like we got triple top formation. So which one is it? So very good question, and actually very logical question. So good job, Mr. Tam, because clearly when you're getting in a situation, when you're analyzing the charts in the markets, there's various angles to look at the situation. However, it is by examining the context, or in other words, looking at multiple factors instead of just looking at one factor. And what I've discovered from talking to many traders each and every day is they generally jump and they look at just one thing that they feel really good about. Oh, I heard on CNBC, buddy, oh, they were talking about this. Oh, I'm gonna go ahead and buy some puts. You should never be looking at just one thing when you're actually making your trading decision. As a matter of fact, just think of it as, being a Sherlock Holmes, if you will. Okay, so, your goal is to bring as many possible facts and data in order to prove a point. And if you were, for example, an attorney and you were trying to protect your client, in this case, your client would be your next great trading idea, okay? And imagine if you were to go, if you had to go in front of the judge and defend that idea. If you just told the judge, hey judge, I think I should buy puts here because I heard it on CNBC, what is the judge going to do? I mean, come on, the judge would laugh their ass off and say, come on, buddy, show me some real. What do you have? Now, when you can point out to the judge, look, check this out. I've got this on the chart. I've got this, this, and this. And this is why I think this trade is 100% innocent, okay? Then you may have something there, guys. So unless you get the context and you analyze the context on different time frames, unless you understand what's going on, not with just one particular indicator or not with just one particular behavior, if you take a look at multiple factors, you should arrive at least 5 to 6 reasons why you're actually getting into a trade. So when you're making a decision, whether it's a multi-top formation or whether it's a cup with a handle, context and analyzing the context is the most crucial aspect of getting your answer correctly. So with that said, why is it actually the cup with a handle now? I'm going to give you a few basic ideas here, guys. If you'd like to learn more, definitely click the links below. We go in very specifics and details about all of those things in our courses, the 13 Markets Move Formula, Charts Divergences, and the Rockstar course. So for the purpose of this video, we're trying to keep it brief. Basically, the last few times the markets were hitting the level of 29.30, 29.50, 29.60, okay, a lot of investors were highly optimistic and they were investing money at these levels. And you know what happens next? The markets drop. So the second time the markets revisit the same levels, guess what? Those people that unfortunately got in the first place, they actually are anxiously to get out at these levels. So it creates a very strong resistance level because every time the market tries to move higher, guess what happens? It stalls out and it reverses lower. And that's been the case in the last 3 times the market has gotten to those levels. Now, this time, the reason it is actually a different market environment and a different context because we have already officially cleared those levels, 29.30, 29.50, 29.60. So all the people that were getting those levels prior in the last 24 months that wanted to get out at those levels, they did, and now we're actually at a level of 3,010, 3,020 on the S&P 500 futures. What that really tells us, we're at a point where we have never been before in the markets, and there is no level of resistance holding us back from here. In other words, there is no people coming in trying to collect substantial amount of profits, which if you look at the volume, it is characterized by low volume. If you look at the context, the prior few times we got to market highs, the moment we would get there, there's going to be an abundance of sellers coming in to the point where we're unable to sustain those levels. We pretty much instantly drop. Right now, the context is entirely different. We're actually clearing those levels of the past, levels of the resistance, and we're holding these levels. And the volume is telling us that there's not as many people willing to sell at these levels any longer as in the prior instances. That creates a very solid foundation for the markets to actually move higher. Now, the way I like to think of this is I use the term, there is nothing but air. And when there's nothing but air in the markets and we're breaking out of powerful, very bullish patterns, markets are able to make some substantial increases over a very short amount of time, which is why trading options makes it so powerful to capitalize on this type of market environments. Now, if you're new to options, guys, hey, click the link below. Go to our website, tradingoptionslive.com, schedule a 20-minute free coaching call, and get your questions answered how you can actually switch from trading stocks to options so you can experience the greatest trading success this year that you've ever had throughout your trading history. Now, what makes this cup with a handle that we have been mentioning so many times so powerful, guys, is if you take a look at any different time frame on the chart, like the daily chart, the weekly chart, we're getting an exceptionally consistent reading, which is remarkable because it does not happen very often. In the daily 13 Market Moves daily video, I have brought up many examples of how symmetrical the markets actually are. So when you're looking at the charts, sometimes you have to kind of connect the dots and you have to look at things in a certain way to really make sense out of the charts. But in this particular market environment, things are really easy, just like all the dots are already connected, which doesn't happen very often, okay? So remember this, when you have multiple confirmations of bullet chart formations on multiple time frames, that gives you a higher probability of a substantial move higher. Now, with that said, guys, another notable difference in the context from when the markets were trading at these levels before, or close to these levels before, is the participation. The prior few moves higher in the markets were driven predominantly by the technology stocks. And this is actually exactly the opposite now. Technology stocks are slightly lagging the broader market. The most important aspect of this is the fact that these new highs in the market are created because many various sectors are participating. Exactly what we're observing today is Citigroup announced the earnings report. It's not a really super hot report, but they're buying the dip in the stock. If you actually analyze the charts of all the financial stocks, the charts look exceptionally bullish. Now the paradox is this, they're not supposed to be looking bullish right now because the fact that the Federal Reserve has pretty much made a commitment to ease on the interest rate policy and potentially make a couple of rate cuts by the end of the year. That is actually a negative aspect for the banks. However, a very important thing is when most of the market's participants expect a move in a certain direction, it actually has a low probability of happening. So we're in an environment right now where the macro conditions dictate for the financial stocks to drop. Coincidentally, everybody has been expecting the financial stocks to rise last year, and if you were to turn on any media channel, that's all they talked about. Oh, the financial is such a great buy, you should buy them now, and they continue to drop and drop and drop lower for the duration of the year. Now, the market context is entirely different. We actually have no reasons for the financial stocks to go higher, but yet they're going higher. And the charts point to even a bigger move higher in the financial sector. We're also noticing some very interesting activity in the transportation sector. The transportation sector, with the FedEx being such a major component of the transport stocks, it actually set a low within the last couple of months and it's bouncing strongly off the low. That basically tells us there is a renewed interest in buying the transportation sector. in analyzing the charts over the weekend of JB Hunt, actually some substantial buying activity going into today's earning reports, which will be revealed after the market closes. So very interesting stuff. All of a sudden we got a complete reversal in the transportation sector, and typically the drop in the transportation sector precedes poor market conditions, the recession, the huge market drops, and so on. But we're actually getting the exact opposite of that right now. Based on the chart, it appears to be that they will be buying the shares of JB Hunt. So with that said, guys, we got financials rocketing higher when everybody least expecting it. We got transportation stocks pointing to a brutal reversal, okay? And they can take a lot of bears out. That's why you have the three bears going to a bar, ordering Red Bull and vodka, guys, okay? So you wouldn't typically see this unless it's a real bull market. And with all these sectors participating, and if we get this JB Hunt trade on board today as well, we're clearly in the go to hit new time highs. We are getting an incredibly rare reading on our 13 markets move formula. Guys, which seems like not so long ago, about 10, 11 days ago, before July 4th, we were posting a video that was titled 7777 Market Move Quadra 7. We're actually tracking for another Quadra 7 move. We just hit 777 last week, with Friday being the third 7 in the market move sequence. And today on Monday, it appears we could be staging for another rally into the close and hitting another 7. And if that is the case, that pretty much clears the pathway for bullish moves higher, about 8 to 10 days, possibly 2 weeks to 30 days. So those are the reasons, guys, why it makes sense to continuously buy calls even when the markets are hitting all-time highs. If you'd like to understand more details about the charts, more details about the 13 markets move formula, guys, click the links below. Take advantage of all the information that we've recorded for you in our courses so you can evolve to be the best trader you can be. Thanks, guys, for watching, and I'll catch you on the next trade tomorrow.